Hello guys, welcome to today's video. In this video, we are going to talk about the estimated expenses post MBA and also the potential payback period after you get your MBA from the US. Okay, this is going to be a super interesting video. Stay till the end because I'm going to use Excel quite heavily in this video and we'll talk through each single line item, whether it is in terms of salaries, whether it is in terms of taxes, whether it is in terms of expenses or the different scenarios for savings. So let us get started right away with the first part, that is salaries. If you typically look at any of the top business schools placement statistics report, right? Let's take for example Columbia. Here you go. So I want you guys to primarily look at the salary figures. Okay, so focus on the middle table, that is the base salary, the signing bonus and the other guaranteed composition. So you will notice that the average base salary is around 150,000 US dollars. Okay, the range is pretty high, but let us go with the average base salary number. The signing bonus is 20% on top of the base salary, so that is 30,000, and other guaranteed compensations, we will talk about that, that's close to 30,000, right? So overall the salary that you might be end up receiving is close to $200,000. Okay, now if we compare this number with another school, let's take for example UNC. This clearly says that the average base salary is 125,000 USD and the average signing bonus is around 30,000. So we clearly see that there are two components to the salary. One is your base salary, which you receive on a monthly basis, and your bonus, which you typically get at the end of the year. Okay, and there is a third part of the salary which we have noticed in Columbia's placement report, that is other guaranteed benefits, right? So that is your 401k match. Let me explain what 401k match means. Okay, so if you are working in India, you have a provident fund, right? Your retirement fund, so to say. In the US, it is a 401k fund. Now what employers do is that if you put in $1 from your salary into your retirement fund, it's considered to be a good thing, correct? The employer will say that, for example, Amazon, McKinsey's of the world, they'll say that, Pawan, by the way, you're doing a fantastic thing, that you are thinking about your retirement. I will also help you with increasing your retirement fund. So I will add on top of what you are giving to your retirement fund. So if you are putting in $1 into your retirement fund, let me put another 50 cents on top of it, right? So it's not like, if you put $100,000, the entire salary in retirement fund, these companies will also put the entire amount. No, that's not going to happen. They'll put a maximum of $10,000. So that $10,000 is literally free cash. So if anybody is actually in the process of getting an MBA or in their post-MBA career, don't ignore this free money because this could easily hit $10,000, $15,000. So that's the third component. Now we know these three components. Let us go into our Excel sheet and start the analysis. If you want to play with this Excel sheet, I'm giving you the link down in the description box. Please go click on it and continue to play with it. But let me first explain you what are the different components within this Excel sheet. The first one is the estimated base salary. You can get it from the placement reports of any of the schools that you are targeting. Okay, typically the range of this base salary is 125 to 150, 160,000 US dollars. Okay, I've taken the base salary over here. And then the four components of the Excel are the salary, the taxes and the cost. And finally, we'll get into the savings. I'm just putting it down below. Okay. Now, salary, taxes, cost, and the three scenarios that you will see is the low end of the spending scenario, the medium end of the spend scenario, and the high end of the spending scenario. So this will give you three different potential savings options depending on your lifestyle, depending on where you are actually going to work post your MBA. I'll also talk through why that is so important over here. So let us jump right away. So as I already mentioned, the base salary numbers directly come from your business school placement report, and that is the only input that you need to give. The second number that you need to think about is the bonus component, right? The sign-on bonus. Now the sign-on bonus typically is 20% of your base salary. You can go check out these figures on the placement reports, and this number is approximately 20%. The third figure, as I was talking about, is the additional benefits component, the 401k match. Well, in majority of the scenarios, these two are given right from year one. Okay. Well, if you combine all these numbers, the estimated pre-tax income is going to be the same. So if it is $125,000, your estimated pre-tax income is around $157,500. Okay. Now that is about part one. Now if we move into part two, which is taxes. Yes, so this is an interesting topic, and there's not a lot of things that you can do regarding taxes, but it's very good for you to have an idea about the entire tax structure. So there are two kinds of tax that you have to pay in the US every single year. One is the overall US government, that's federal tax, and the second one is the state tax that is specific to the state that you are living in. For example, if you are living in California, you have to pay the federal tax and you also have to pay California tax. If you are living in Texas, you have to pay federal tax and also Texas tax. By the way, Texas doesn't have any tax, so you'll be saving a lot of money over there. Let us get into that scenario as well. Now, as I mentioned, the federal tax typically is 26% of your base plus bonus. Okay. Additional component, the 401k match, is usually not taxed, or you have bunch of different options regarding how that number could be taxed. So I'm not considering that for our purposes right now, because anyways it's a small number when you consider the overall numbers. So the federal tax is around 26%, and the state tax, if I'm considering the low end scenario, for example, if you are working in Texas, there is absolutely no state tax. If you are working for Amazon in Seattle, right, there is no state tax, so you are literally saving quite a lot directly. Okay. On the other end of the spectrum, if you are working in California has one of the highest tax rates, state tax rates, which is around 9.3%. So out of your overall salary, you are paying close to 9%, that is $13,000 for California state government. So if you look at your final salary after tax, you can clearly say there is a difference of almost $13,000, right? Yes, there are states like Illinois, Chicago, right, where the tax is probably somewhere in between, that is 5%, and the other end of the spectrum is 9.3%. So the implication for you, if you are getting to choose which location you can work from, you obviously know where you can save the most, right? Of course, you have another 100,000 things that you need to consider probably, but I'm just giving you a pure ROI scenario. Now, if we move into the cost component, right, that is what are your monthly and annual expenses. Your annual expenses start from your house rents, groceries, fuel, entertainment, so on and so forth. A few interesting things here. The house rent is extremely dependent on the place that you are going to work. It's not about, hey, you're going to rent a luxurious villa, so you will probably spend more. Yes, that will anyways happen. But so if you're working in a state where the living expenses are low, like for example, Texas, your house rent could be $1,000 per month at the most, right? On the other end, if you're looking at New York City, Chicago, Washington, DC, or San Francisco, of course, the house rent is going to increase quite a lot. So it could be $1,000 and it easily doubles down to $2,000 per month. Let's say the mid-range cities like Virginia, Atlanta, and a bunch of other places, probably you'll end up spending $18,000. And this again is super dependent on the place. If you look at all the other individual items, I've also included your study loan EMI, right? I went to Axis Bank EMI calculator and basically put an estimate that, hey, if you have taken a loan of 1 crore rupees, how much EMI do you have to pay every single month? And that comes out around like $1,000 to $1,200. And so on an annual basis, it is $15,000. Now, if you combine all these spends, right? Hey, you might say, why are you putting so much for my mobile bill? Well, mobile bills are relatively super expensive in the US compared to what you are used to spending in India, guys. If you are spending like, let's say 600 rupees in India for a 3-month plan, you will be ending up with $100 or $150 of phone bill once every 3 months. Okay. That's the reason why this utility, mobile, Netflix, Prime, you are anyways going to have it. These numbers will add to the final bill quite substantially. Now, hey, when I was in the US, I used to share a lot of these bills with my friends. So that's why Of course, we love our friends. We share expenses and we double up our revenues through them, right? No kidding. But if you have been there and done that, please do like the video. So the total savings are estimated to be $77,000 per year, right? If I look at the high-end scenario where you are spending more and also you are living in an expensive city, your of course spend will increase and your savings will come down to, let's say, $40,000 per year. Well, guys, again, don't put a gun on my head and say that, hey, these numbers are not correct. I'm just giving you a directional sense based on my experience living in the US. I lived across like a student, I lived like a single working professional, and I also had a family when I was working in the US. So the estimates of low, medium, and high are directly coming from my personal experiences. I have given a lot of links to back them up. For example, the groceries and food bill. Hey, why are you going to spend only $300? Well, that is what the US Labor Statistics Department says, right? Similarly, the US Energy Department says that, hey, the average fuel bill is around $200 per month or $300 per month, right? So I've considered all these different scenarios and based on my experience, double checked the numbers and took these numbers from various government websites. So this indicates that the $77,000 number might be off by 10%. So it might be up or down by 10%. So 70,000 to 80,000 could be the savings range on the low end, or it could be 40 to 45,000 on the high end, right? So if you are taking a $150,000 or $200,000, let's say 1 crore loan or even more, you typically can pay it off in 3 years, okay, on the low end scenario, or 5 years in the high end cost scenario. Then why did I put the loan payback period as 2 to 5? It should be 3 to 5, correct? No, guys, it should be 2 to 5, because if you see the estimated base salary and if you increase that estimated base salary assumptions, then you will say that you are saving almost $100,000 per year, okay? Hey, well, you might say that, hey, with $150,000 base salary, how can I save $100,000? Because there is bonus and because there is additional component and all that stuff, okay? So you are saving $100,000 in the best case scenario, and you can pay back your loan in 2 years, okay? On the higher end of the scenario, you can probably pay back your loan in 3 to 4 years, guys. So roughly your loan payback period is 2 to 5 years if you consider various scenarios. Now, the two factors which are going to be super important is number one, the state tax, and number two, your house rent. And these two to a lot of extent depends on the place that you are going to work. So if you get an option and choose where you are going to work, please choose wisely. So I hope this analysis indicates to you two things, okay? First, that hey, your ROI in the short term is also positive, right? You are not going to think that, hey, I'm going to earn $200,000 and probably I'm not going to pay my loan back for a very long period. No, that's not going to happen. You can clear your debts, every single thing possibly in 2 to 5 years if you plan in the best way possible. Even if you are on the liberal end of spending, right? It's still possible for you to actually clear off all your debts in 5 years. So even if you are spending a lot, the petrol price is not going to increase just for you, right? So the savings will be there and you can clear off your debts in the 5-year horizon at the max, okay? So the other point I just can't stress enough is the fact that, hey, if you are going to work in an expensive city, please make sure that you probably negotiate a little more with your potential employer, okay? So I myself have made that mistake. So I'm just teaching from my own experiences that, hey, yes, employers would also be willing to give you that additional room of comfort when it comes to, hey, how much you are going to earn depending on the city that you are going to live. All right, guys, if you like this video, please give it a thumbs up. If you like my Excel, please go and download and probably play with a few scenarios. Again, a quick disclaimer, these numbers need not be 100% right, but it will definitely give you a sense of direction and how long it is going for you to pay back your loans. Please share it with your friends, and thank you again, guys. See you tomorrow.